All right, we are back at another, at another technical analysis for dummies, and I am gonna come into, man, where's it at? Aha. Defining technical analysis for chapter 1. So this is pretty important. I'm gonna run to page 8, and it talks about right here. Oh man, I apologize. This ain't the best. Like I said, this ain't gonna be like the best video to watch about this, but talks about who are you? Who are you? Both traders and investors use technical analysis. So what's the difference between a trader and an investor, right? So I'm not gonna go through all that. Choose a trading style. Trading styles are a function of holding periods or how much time elapses between buying and selling the security. Position traders, swing traders, day traders, and scalpers. So those are the 4 things on page 9. This is on, the 3rd edition. They talk about right here. Position, swing traders, day traders, and the scalpers. So you can see what they're talking about there. I'm not going to try and explain what these positions, what these types of traders are. So you can definitely find that on Google for yourself. Right here on page 11, I'm just hopping right through it. The trend is your friend. So pretty cool to see this. A lot of people talk about the trend is your friend. Yes, at the time of the trend, whether it's an uptrend or a downtrend, you need to understand of where the possible reversal points are going to be. So that's another thing we're hopping to right now. Charting your path. So right here on page 13 talks about a reversal point. They can show you a graph. Downtrend, key, reverse. I'm trying to show you guys this. You guys can see this. So it's very important because when you ride the uptrend and it creates so much impact and objection on the resistance path, then you gotta look for, for me, I look for a bunch of candles creating that structure of resistance. Same thing on the downtrend, whether it be one major candle on the daily or the weekly, creating that reversal candle, like a really strong bullwhip off that candle, off the daily or the weekly. And if not, then I'm looking for a bunch of candles creating, support or resistance on top. So it's very important to understand when trends reverse, especially long term. They talk about picking a time frame, and understanding what time frames you want to look at. Market timing, trend following. It's still on the first chapter. Let's see. I want to run through. Aha. Why? Right here. Why technical analysis gets a bad rap. A lot of people talk a lot of crap about technical analysis. So they talk a lot, what happens when people look at the charts and then, where they see a false breakout or they see some kind of reversal or they see the trend not really doing anything because it ends up, when there's not a trend, then it's consolidation, right? You're in a consolidation phase or stuck in a price zone and you don't know what you want to do with it. Well, you're going to have to wait for that breakout to come out so you kind of get a definite confirmation of where you want to go. So they talk about this. They say that the biggest mistake that beginning technical traders make is attributing too much reliability and accuracy to technical methods. Experienced technical traders know that no technique works all the time. In fact, many techniques work only when the majority of the market participants believe that they will work. Forming a semi-fulfilling prophecy. You needn't Okay, I guess you needn't care whether the theory is valid. Your goal is to make money, not to be scientifically pure. A lot of technical traders, even including myself now, right? You come to a point of saying, "Oh man, it's got to be correct all the time," right? Because based on the structure, based on candles, based on the charts that we're looking at. So you gotta draw yourself back and be like, okay, if this doesn't work, gotta adapt. So that's why I talk about adaptability. Adaptability is really, really crucial when things are not going with technical analysis, right? So if the trade wars are affecting, obviously that's more on the fundamental side and the political view side versus the technical analysis side, right? Can't just stare at the charts and be like, oh, we know that trade wars is happening right now because we're just staring at the charts. It doesn't work that way. So you have to bounce back to fundamentals when fundamentals are intact. Let's see what else. Beating the market is hard. Yeah. Still on part one. Want to hop into, for those of you that do decide to get this book, I would recommend reading the first chapter because you have to understand where your basic technical analysis is coming from. If you're using a bunch of indicators like RSI, MACD, stochastic, moving averages, they even talk about it in here, then you're solely relying on your indicators instead of looking at the candlesticks and price action. Something that you have to really dive down and figure out what your primary focus is, especially if you're 100% technical analysis. In chapter 2, I want, if you are going to read chapter 2, I would recommend reading Supply and Demand, the crowd behavior, and understanding crowd extremes, overbought and oversold. For chapter 3, I would recommend reading Blindsiding the Crowd and Thinking, no, not that one. Yeah, Thinking Scientifically. So then for part 2, it comes into the art of trading. So it goes more in depth about indicators, back testing, what results you're looking for when you're using the indicators. If you're not using indicators, but mostly just talks about indicators. Chapter 5 is talking about managing the trade, which that's something that you should, chapter 5 on page 70 says controlling losses. So let me hop into here. I'm not going to go run through this whole book because it's a lot to look at. Your level of risk seeking or risk aversion is personal, therefore nobody can design rules for you. You must do it yourself. Ask yourself whether you faithfully follow your every buy-sell signal of given indicator when history suggests you will have some trades that entail a loss of 50%. No. Well, how much of your trading capital are you prepared to lose? This is not an idle question. Your answer is critical to whether you succeed in technical trading. If you say you can accept no losses at all, forget technical trading. That's very important. You will take losses in all trading, even well-designed and planned technical trading. If you say that you're willing to lose 50% in a single trade, whoa, Nelly, that's too much. 3 or 4 losing trades in a row, and you would not have enough capital left to do any trades. I offer some help in reducing that. So, there's page 78 in chapter 5 talks about managing your trades, and then they talk about stop loss orders, and then to me, I don't use stop loss, but it talks about here mental stops right here. So this ain't no made up stuff. They even talk about here mental stops, right? So right here. Many traders say they keep a mental stop in their heads, but this method is a delusion. Because the reason why they're saying this is the delusion, because most people, including myself in the beginning, just want to keep making more money, right? Because we don't want to set a stop loss because we foresee the future of making more profit or more pips. And then it becomes a long-term swing. If that's the case, you really have to set what the fine line of taking profit is. Some people can't do that. So that's why they're making fundamental stops here. To me, like I said, till this day, I don't use stop loss. And I already made that video explaining why I don't use a stop loss. And so it's totally on you how you manage your own trades. And the book, I mean, this book is more on the conservative, low risk management side. So if you want to be high risk, this book doesn't really talk about being a high risk aggressive trader and what to look for as a high risk aggressive trader. So it's just more in depth of technical viewpoints, what they see in technical analysis, and and low risk conservative trading. That's what it comes down to. So, but I want to come into right here. This right? Yeah. So chapter 5, that's on you if you want to read chapter 5. Like I said, what I said in most of my videos, you should already know what you're willing to risk, because no matter what you're risking the trades, whether it's a 0.01 lot size, a micro lot, a mini lot, or one standard lot, doesn't matter. You're still risking to make money. I don't know how people can say they're not risking anything to make money. Just that goes in businesses, in any business aspect. So I don't know how people can say, oh, I risk 0% and get 100% return. That's kind of like freeloading. I'll just be honest about that, because you're basically doing nothing. Chapter 6 is pretty cool to read on bars. Now, I don't use bars, but if you go in more in depth of chapter 6, you wanna. No, I don't want to talk about bars. Oh, never mind. Let's pass. This past chapter 6. Chapter 7. So I would not recommend reading chapter 6 because it talks about bar charts. It's not candles. So I'm a candlestick guy, and I talk about the Candlestick Bible. Chapter 7. Do not read chapter 7 if you not like to use tick charts. Okay. So I'm going to put that down in the video description. For those that don't read the video description, I recommend reading the video description. Yeah, that's chapter 8. Here we go. Chapter 8. Japanese candlesticks. Okay. They talk a little bit about the candlesticks. They're not in too much detail about from the Candlestick Bible, from the Japanese author, which that I would recommend. Or if you want to get the book from Steve Nissen, he also is very he's a professional candlestick trader as well. So they even mention his name here. A trader named Steve Nissen brought candlesticks to the attention of Western traders in 1990. Candlestick patterns became instantly popular because they embody the principle of imputing trader sentiment to the bars as a shaving top, where the close is at high. Okay. All right. Well, I'm gonna hop into. Oh, come on. No, I want to. Yep, doji candles are important. I recommend understanding these doji candles. Plain, dragonfly, and graveyard. I recommend understanding. I'm not going to explain what these candlesticks mean, but it's very, very important to understand what they even talk about right here. I mean, shadows in the doji bar, and so they talk about what the dragonfly doji means, what the gravestone doji means, and what the plain one means. What else? Trying to see what else here. Oh, on page 141, they talk about extreme candlestick emotion, yeah, extreme emotional extreme candlestick patterns. Hammer and hangman. Here we go. The hangman. This is key points of reversals. A hangman. Let me show you guys here. Turning to reversal patterns on page 143. So it's the page right after what I just showed you guys. Let's see what else. Oh, and these candles right here, engulfing candles, like the big bearish and the big bullish engulfing candles, and also the three soldier candles too are pretty important, especially when you see them on the daily structure and the 4-hour structure. So they don't talk about what time frames to look at, but if you look for the 3 white soldiers or the 3 black crows, like yeah, I just call them soldiers, but I always call them soldier candles, but the ones that are going down, they call it 3 black crows, which entails of a downtrend. So when you see that on the 4-hour and a daily, then the 4th candle, right? If the 3 white soldiers, those are the 3 bull candles, then you would sell on the 4th candle, where it'd be the 4-hour daily. If you look at the 4-hour and you look at the daily, you can see these candles are more precise on the candlestick structure. They don't talk about the time frames. Now, if you talk about the shooting bar or the shooting star and the morning star, those are pretty important because those are key reversal points, along with the hangman candle that I showed you guys, or the inverted hammer candles. Those are pretty strong if you're looking at the weekly and even sometimes on the monthly for like a really strong reversal point to where you want to hold it out for 3 to 6 months, or even a whole year if you're a really, you know, that of a long-term swing trader. So if you're a scalper, obviously to scalp on candlesticks, I don't know, did they even talk about here? Probably not. But if you want to scalp on candlestick, you're basically scalping straight back to the 15-minute, 30-minute, maybe. I don't know. I don't go anything less than the 15-minute. So it's just, and if you go down to the 5-minute or the 1-minute for candles, it's just so much to look at, and then you get caught up in that mode, in that right now mode of what you want to do right now and get out within the next 30, 60 seconds. And that's how fast paced it is, because you're second guessing and you're anticipating so much on candlesticks closing in and a new one coming out. So with the 15 minutes, a little more accurate, and then tie the 15-minute with the 30-minute to a 1 hour, so you can see where this trend's trying to go. If it's just bouncing up and down, then you're just back to consolidation. Let's see. Trading candlesticks alone on page 147, still on chapter 8 here. I'm going to show you guys this. So I'm going to highlight some of this here. Reading candlesticks is like reading standard bars, endlessly fascinating, even addictive, but be aware that all bar reading takes practice. Some specific bars and patterns of bars are well known, thus likely to get the expected response from market participants. But to do a good job interpreting candlesticks, you need to understand the dynamic and complex relationships of many patterns all at once, like juggling 6 oranges rather than 3. Really? Like juggling 6 oranges? I don't know why they even say that. So even at the end, they're saying evaluating candlesticks alone without confirmation from other indicators is a daunting task. First, you have to define carefully what each candlestick looks like, and can it be bullish or bearish depending on the other bars around it. So, and then there's some recommended books that they recommend on page 140 about candlesticks. But if you want to go candlestick, just get the Candlestick Bible. It's a free PDF from the Japanese author guy. I don't know. I'd have to say his book is phenomenal. I mean, for candlesticks. So instead of going to Amazon buying their candlestick Bible, you might as well just get the free version. I solely bought these 3 books so I can showcase exactly, you know, what I highlight in these books and what I look at in these books, especially for those that are beginners that want to come into trading. Do I recommend reading the whole book? No, I don't read the whole book. I'll be honest about that. I don't read the whole book. I look for specific areas to where I want to improve. Okay? You can always improve all around, right? Like a 360 all around. But if it's a specific area or a specific content that you want to improve on, especially, you know, for your, whether it's Forex, business, relationships, personal. I mean, there's so many out there, but you got to, you know, be a little bit more specific on what you want to read on. Just because you read the whole book doesn't mean you understand the whole book. Some people say they read the book, but then they're not applying exactly what they're reading out of the book anyways. So then basically they're not acknowledging what they read, and they're not applying after what they read. So gotta do those 2 things. I don't know why people say opposite things, you know. Oh yeah, right here. Finding patterns. To me, I look at double tops, double bottoms. They even talk right here, chapter 9, seeing patterns. They talk about head and shoulders, but I don't look at head and shoulders. Let's see. I don't know if I want to explain why I don't look at head and shoulders. The reason why I don't look at head and shoulders or draw the trend lines is because I'm more focused on candlesticks, and then I tie it with price action. When you tie the candlesticks and you actually see where, you know, where a structure is being hit previously and it ain't going nowhere, especially when it hits a really high resistance price, tie the candlestick, tie the price, backtrack it to last year or backtrack it to 4 weeks ago or whatever it is, and you see the same setup, candlesticks repeat itself, price always follows that. And then it's gonna be a major turnaround going all the way down. You know, if you look at head and shoulders from every single head and shoulders, like at that very high point that creates the head, that's the best time to catch the most amount of money in pips instead of waiting for it to break the neckline. So that's why I don't wait for it to break the neckline. If you are low risk and you want to see the neckline get broken, you know, and then you use head and shoulders, then you're missing the amount of money that you could have made on top of the mountain. That's what I'm talking about, on top of the head. So I don't look at that, right? If you're talking about making the most amount of profit in pips, then you want to get in at the very top, right? You want to sell at the very top, at the very highest price, right? And you want to buy at the lowest price. So instead of, right, they don't talk about time frames on head and shoulders here. But for me, hop back to the 1 hour or the 4 hour and start tying these resistance points and start tying these structures of resistance, right? Same thing if it's an inverted head and shoulders at the very bottom, creating a reverse point, the very lowest price. Start tying it at the 1 hour to the 4 hour. They don't talk about time frames here. They just talk about what to look for. See, that's the difference. So, I mean, I don't know how many people are actually gonna watch the whole thing, but it's probably longer than the other one. So that's why, like I said, that's why I don't draw a trend line for it to break the trend line, and that's why I don't use the head and shoulders thing. Because once you fully understand the naked Forex, and I know that the last couple of chapters naked Forex they talk about trend lines, but I don't use it. I I took the time to understand candlesticks along with naked Forex. And then I tied the candlesticks right back again because I want to look at the structure. Every structure gives you a clue. Every candle gives you a clue. And then right with the candles is a closing of a price. So I'm breaking it down as simplified as I can, you know. And so if you want to use head and shoulders, go ahead. I mean, if you want to use trend lines, I talk about trend lines here and drawing trend lines, but I'm not going to talk about that because that's not what I do. So, but in here they talk about it. Drawing channels. Page 184 and 185, dealing with pullbacks and breakouts. So false breakouts as well. Yeah, false breakouts. That's pretty interesting to see. And then they talk about if you use channels, you draw the two trend lines on the channels. Kind of like here on page 189 on chapter 11, where where they draw two false breakouts to where the price got shot down out of the channel and then it shot right back up to close in. But these are just bars, so it's tough to look at these lines. So linear regression channel. I do not use channels. I don't. Yeah, pivot points. I don't use. Part 4 is dynamic lines and dynamic analysis with simple moving averages. So they talk about moving averages in here. Moving average 1, 10-day moving average tied with the 20-day. I talk a lot about the 10-day with the 20-day because it's easier to work with, or if you tie the 17 to the 14, if not the 5 to the 10 for scalping. I don't use it anymore. And like I said, I'm more of a swing trader. So can you scalp with naked Forex? Yes, you can. You can scalp naked. You can scalp with naked Forex. You can scalp with price action. You can scalp with candlesticks. You don't need to put a moving average on there. With the moving average, how I looked at it is that if it bounces off the moving average, it's creating a trend, and it's going to keep creating it. And then hop that. Like how I would look at it is that when I was using the 1 minute to scalp, if it keeps bouncing off the moving average, then I'll jump straight to the 5 minute. And if it keeps bouncing off the 5 minute on the moving average on the 5 minute chart, then I'll go straight to the 15 minute. And then I start seeing some kind of then I start seeing like where it's an uptrend, right? Because it's bouncing up, or if it's bouncing down below the moving average, the 10-day. Then you start seeing, okay, well, this is the trend. So guess what I'm gonna do? I'm gonna start stacking. I'm gonna put like 10, 20, 30, whatever positions. And you could, like I said, you don't have to go do it my way, but if you want to be a little more aggressive, then start stacking, when you start noticing a trend on the smaller time frames. So I don't do that anymore, but that's something if you want to test for yourself to see if you like it. A lot of people come in, look at my videos, and they're like, I'm gonna do exactly what Ku does. I don't know why people do that. It takes time to get the ball rolling, to build your accounts, and to finally understand what strategy you're trying to do, right? And if your approach is really high risk and aggressive, none of these books really pertain to you. I mean, maybe certain chapters of the book and certain pages of the book, but most of these books are dive down to low risk conservative, and they just give you a bunch of it's not how to, but it's a lot of learning on reading. So that's on you guys. I mean, let's see. I want to hop into. I know I didn't go too much in depth about this book. I just basically just talked about my stuff. Trying to see here. Okay, well, if you just go straight to chapter 18, it goes to the 10 secrets of the top technical traders, right here. That's all you gotta do. Go straight to this page, chapter 18. Read it. read this, read the, yeah, pretty much just read the whole, it's the yeah. Read chapter 18, and then if you read chapter 19, it talks about the 10 rules for working with indicators. Now, I don't use indicators anymore, so, but it's something that you should, basically 6 pages from chapter 18 to chapter 19. So if you read chapter 18 and chapter 19, you'll look at this and see if technical analysis with indicators is where, if you don't use indicators, go with candlesticks and price action. You can't beat those two. But if you're all about indicators, then you're gonna have to jump into there's a lot. I mean, chapter 6, chapter 7, and 8. So that's totally on you if you want to go and use those indicators. But like I said, moving on to the third book here, I'm gonna call it a day. And yeah, I mean, there's gonna be more videos on my mentality on Forex, my psychology on Forex. Yes, I know a lot of you have been anticipating that after July 4th weekend. So I talked about that when I was live streaming. Other than that, wish you guys a great, successful day, and tomorrow's Friday, so don't get too caught up on Forex. There's not much going on today.